All right, guys, back at it. Good morning. Good morning. I've been had a video in the past 2 days. My apologies. Finally coming back at least to normal in terms of my allergies. If you could tell, I have a little bit of a still stuffed up voice. My apologies again, but it's been too long. So back at it again. My voice is going to be a little less than usual. Again, just issues with the throat due to allergies. But good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Glad to have you on board. Just going to charge a couple of things here before I head to the office. Here we go. Rock and roll. All right. Bottom right-hand corner of your screen, little black logo. Click on that. Turn on notifications. Subscribe to our channel. Make sure to hit that like button if you like these videos. As always, thanks again. Let's go ahead and talk about it. I mean, we have so much to go over. Past 2 days have been kind of fun to see. Let's see where we go. Let's go ahead and expand one of the actual cells so you guys can actually see it. Let's go and do it. Dow is down about 10 points this morning. Nasdaq up about 16. Nasdaq futures are now in a new bull market. I know. It's 20% above its most recent lows back in June. I want to say June 16th or so, June 18th. S&P futures are flat, 41.58. Russell 2000 futures 1913, up 0.14%. Let's go ahead and take a look at S&P futures while we talk about the rest of the stuff. On the 1 hour chart, you can see now that we do have this megaphone setup as we've been talking about. I had another trend line there and I don't know where it went. Very strange, but I could just draw it again. So the trend line that I drew here, you could see if I don't know if that's going to be the right trend line. Yeah, just right around here. You could just extend this to the right. And you could see that if we extend this down to the left, not the best in terms of the exact setup in terms of trend lines. But again, if we start here from about 2 Mondays ago, we've been kind of heading to that direction to the upside. The 20-day moving average, the purple line, of course, has been kind of giving us a little bit of a guide. But again, short-term resistance here, 41.85 is my level for resistance. Again, we tapped this yesterday. I talked about this on Twitter, and I said 41.68 or 41.50 or so. That was a key level. We broke above that, and then we kind of came back down. So again, we are still following that trend line, really just from point A to point B here. There you go, point A to point B, and then I just extended it. So again, 41.70.87 seems to be that resistance now. We kind of been hovering around it. Let me see if I can find another S&P futures. I think it was set up again. There you go, S&P futures. Yeah, I had a different chart. They must have removed a couple of things. Very strange. I also had some Fibonacci levels as well. But we'll expand this out, and you could see, guys, so many lines on the screen, I know. You have the megaphone set up that, again, it's still within that parameter. Now we have a trend line where right in the middle between a couple of points, 4,200 being a very key level. That's a level we haven't seen since last of May. If we expect to go higher, then you have levels here around 4,294 or 4,300. I had a question today from Investment Club. What level would it be where you think the worst is over, where we could start buying that the bottom is already in? Excuse me. It's right around 43.36. That's a 200-day on the daily. So we're going to keep that level in our back pocket. We still have plenty of gaps to fill to the downside, guys. I mean, let's take a look at SPX. SPX has a couple of gaps. You have one here, 37.95. We still have to fill that. And we still have the 36.83. No more gaps here short term that I see other than that 37.95 and that 36.75. But if we bring up the hourly a little closer, then we see that we have more gaps. We have a gap to fill at 40.73, gap to fill at 40.92. We have a gap to fill at 39.22. We have a gap to fill at 38.31. We have a gap to fill at 37.90. So that's around about 5 gaps to the downside since we've just been continuing up. So again, retesting isn't a bad thing. If you retest and bounce, that's actually very bullish. But again, guys, I would not expect this continuation to last much longer. I mean, again, I hope I'm wrong. I hope that we soar to 4,500, 4,800 all-time highs. Sure, the problem is it's just not likely. So again, we're keeping an eye on this setup. We also had, oh, here's the next trend line, and here's the other trend line. There you go. Finally, I expanded it. We had a trend line from here up, and now these vertices are kind of interlinking since I put another trend line. And again, still the same deal as comes in 41.86. All I did was put a trend line between this point here, the bottom, and we connected it all the way up. And then this one we just did a little while ago as 1 and 2 right there. So again, I know a ton of lines on the screen. We're still in this megaphone setup, still between there. I put some Fibonacci levels from the highs that we recently had. Now I have to set that up. So let's go ahead and edit that. We'll go ahead and cancel this, remove this Fibonacci retracement. We'll go ahead and put a retracement level again. Let's see if I can find the most relatively lows here. So we'll go to the lows here around 39.53. We'll expand it as high as 41.72, 41.73.25. There you go. We do have a Fibonacci retracement level of support right at the 100-day, 41.20. Again, if you're expecting us to go down, that's the level we're looking for. Next support will be about 40.89. But other than that, it's been kind of staying pat where we are. I know tons of lines on the screen, but again, these are very important to watch. Let's go ahead and pivot to the volatility index. Volatility index right now is up about 1%. We do have a gap to fill at the downside right around 21.6. Remember, anything below 20 tends to be very bullish. So volatility is not showing a lot of fear out there. Call volumes are higher, as we see. So people are dumping their puts and jumping in calls, since calls are the soup of the day when stocks go higher. Let's go and take a look at our friend the dollar. Again, pretty much a downward channel, downward trend here. I think no one can dispute that. So we'll go put a level here. We'll connect it to this point here, and then we'll just extend it to the right. And again, we broke out of it, but now we're retesting that trend line. So again, looking at the dollar, if the dollar becomes or is, as we've been talking about for a while, the dollar has been kind of that barometer or been that inverse correlation with S&P. Have you noticed how much the stock market has gone up in the past couple of days while the dollar's gone down? So again, that's something to keep an eye of. We broke out of that. Now we're coming back down just on the 1 hour. Let's go and bring it up on the daily. And again, you could see that trend line pretty much holding up. We broke out of it. I still say we'll retest 105, and after that, we'll see where we go. So expectations are we could get a little more of a rise. The issue is that the stock market was up yesterday, even with the dollar going up. So again, that correlation isn't exactly perfect. Nothing in this world actually is. Pretty much the only, not even a correlation, because there is no correlation. There really isn't much correlation in terms of perfection. So again, you just do the best with what you got. I was going to say bond yields and prices, but that's not an inversion. That's not a correlation of any kind. That's just what pricing is. Let's take a look at the 10-year yield. We'll pivot to that. 10-year yield did bounce off a key level of 25.75. Remember, we talked about that head and shoulders. Remember, if you are looking at a technical pattern, again, especially a head and shoulders, you're always going to retest the neckline. That's what you're looking for, right? If we retest the neckline, again, if you're revisiting the levels that we were before, the question is, do we get higher rates and retest the neckline of around 32 or 3.2%? Well, again, we still have pressure to the downside, at least with yields today, down about 2%. So 25.75 being the closer point, that seems to be less road traveled, less road taken, let's just say. So we should hit that support around 25.75. After that, we do have a couple of gaps to fill. Again, we have one right around 2015. We got one right around 1807. Now, I'm not saying we'll get to sub 2 anytime soon, but it definitely is a possibility, especially if we get a very protracted and a very, really deep recession. Yields are going to come down. That's just a part of life. So I think the stagflation argument is kind of subsiding as we speak, because even the stock market's going up and rates are going down, inflationary pressures are going down due to commodity prices going down as well. Since we know the largest part of CPI is what, guys? It's fuel and crude oil and fuel, fuel and gas, right? That's kind of the main thing. Let's go and take a look at the weekly chart. We'll go to performance on commodities. So let's go ahead and take a look at month to date. And again, you could see month to date in terms of commodities are all down just month to date. Again, you see lumber, crude, canola, gasoline, oats, crude oil, Brent, soybean oil, wheat, soybeans, corn. These are all things that people on an everyday basis use. These prices are coming down. Now, again, the reason why it's coming down really is the dollar and again, recessionary pressures. Gasoline demand currently today is as low as it's been in 2021. So imagine that. Again, it's nothing special. There's no magic bullet in order to get oil prices to go down. It's still just supply and demand. And that's why I don't give credit to politicians or blame politicians for oil prices. They have as much control on oil prices as I do. Sure, they have the SPR reserve, but that's not forever. Sure, you can go ahead and put investment into oil companies to drill more. That doesn't do anything overnight. That takes a while to get refiners online, to hire people, to build infrastructure. That's about a 2 to 3 year plan. So again, there's no real magic bullet to get oil prices down other than a firmer dollar or demand goes down. And we're getting both. That's why oil is down. And that's why I posted about crude oil today on Instagram. Let's go ahead and move on to crude oil. Crude oil again testing the lows of the Russian invasion lows. Now you're probably saying, now what? I do own energy companies. Remember, I do own Chevron. I do own some energy companies in my dividend port. So is this an opportunity? I still think yes. The only thing, the reason why oil companies are going to continue to fall slightly is just the fact of expectations. They've had a banner year this year in the first half of 2022. Do you think they're going to grow from there? That's a really tough question. Now, you could take your profits and move on. I think oil companies, in terms of how you should look at it, is cash flow, dividends. Again, I wouldn't expect a ton of growth. We got that in the first half, but you're not going to get that growth again unless you expect oil prices to absolutely skyrocket. We are now below $90 a barrel on crude oil. I'll tweet that right now. Let me go ahead and set that up. There you go. First time since the Ukraine invasion, we are below $90 a barrel. Nature is very healing. Let's go ahead and move on to gold. And again, gold, we talked about this support level right around 1681, 1700. We're about 90 bucks away above that. We never really tested the 200-day. Again, dollar coming down a little bit. Gold's going to catch a little bit of a bid since it's priced in dollars. Euro dollar 101.84, up about 17 pips. Silver is up about 0.53%. Dollar yen 133.65. Bitcoin futures 22,965. There were some crypto headlines. I posted that on Instagram. 1625 for Ethereum currently. Copper futures are slightly down. If you're looking at if you're looking at a kind of a barometer of a recession or economic expansion, copper is a very good one because if copper prices are rising, usually you're getting some kind of construction demand to the upside. You can see gold coming down now slightly, and crude oil is going to probably continue to the downside. I was looking at CVX to possibly add here. I am up on the stock. There is a gap to fill at 152.50. That's the level I'm looking for to fill. So again, if we go ahead and get there, I'll go ahead and add a little more exposure to Chevron. Chevron's a very strong company. And then see if we can get to around on the daily. See if we could fill that gap. And maybe we can get a little lower down to 142. My contention is we'll probably tap 150 and kind of stabilize around there. All this is crude oil at 90. This is crude oil at 130. This is crude oil at 90. So imagine, Chevron is kind of holding up. If you just play the charts, Chevron is doing fine. They play a nice yield. So I do own it. I'm looking to add some more. In terms of what else I'm looking for, we talked about yields. We talked about the dollar. We talked about the S&P. I think we're pretty much set there. Let's answer some questions, guys. My apologies for my voice. Thoughts on DMI as an indicator. I don't know what DMI is, so I'm going to have to look that up. Maybe it's called by something else. DMI, Directional Movement Index. I have never used that personally, but if that's something that you like using, go for it. I just have to read more about it, my man. Thanks for the question, Austin. William asks, any plays on your watch list today? Well, there is a couple, obviously, things that I'm watching. S&P futures, of course. Remember, we were flat this yesterday morning, and then we ignited higher. I can't say I have anything on the watch list particular that I want to trade today. But again, I am watching S&P and Qs as always. And then you kind of work your way down. You look at the indices, and then you look at the sectors. And then in those sectors, you look at the individual stocks. You kind of go top down in terms of watch lists. So really, I'm watching really just the macro daily. But again, in terms of actual stocks themselves, of what's moving and what's shaking, I mean, there isn't one in particular that stands out. Alibaba had a great quarter, but revenue was down, and they're up today. I do own shares of that. If I'm not wrong, you said multiple times that good news or bad news. Can you explain the reason behind it? Yes. Good news is bad news, or bad news is good news, because we want rates to be cut by the Fed. And the only way they're going to cut is if we get recessionary pressures. And again, a Fed pivot or a Fed rate cut will be monetarily expansive, meaning that you're expanding the economy. You're trying to stimulate the economy. So again, if we have slowdown or recession, they're going to cut rates because inflation is basically dead. You can't have a recession with inflation being high because you're going to have demand cut. That's just what it is. So again, if we get a rate cut, that'll probably indicate your bottom, since now monetary policy will be expansive and then rates will be lower. Traders and investors are going to chase higher growth yields or higher growing industries. So again, it's kind of like a circle of life. When they want to invest in higher growth stocks, that's your Nasdaq, that's your small caps, those names are going to move higher, and that'll get us out of recession, since as you get more investment into more aggressive growth, those people are going to hire to expand. So it's always that Goldilocks, not too hot, not too cold sort of thing. Any thoughts on Lucid? Lucid, another growth company, they had their earnings. All you're doing is retesting the levels you didn't see since July 25th. We had a nice pop into earnings and it was sold off. Would I want to own it? The only EV companies I want to own, to be honest, are Tesla and NIO. The other ones, I'm not interested, to be completely honest. If you like Lucid, fine. You're trading at 18 too. Not really at support, maybe support right around 16 or 15. If that's what you're looking for, just have a long time horizon, because it's going to take a while for this company to really catch up a little more. I don't know about their deliveries. I didn't really read about it. Is eBay undervalued? I think it's undervalued because I don't even know anyone who still uses eBay, to be honest with you. It's not a stock that I would want to be in. I'd rather be in an Amazon or a Shopify. But in terms of PE multiples, eBay is cheap. I mean, it is. Let's see if we could find it on the map here. eBay. Let me see if I had it. It's a cyclical. I can find it in my maps here. And I could just always just type in PE ratio for eBay. It was trading what, at an 8? My goodness, P/E ratio for eBay is 2.8, guys. They do make money, but their P/E ratios are absolutely in the dumpster. So if you are looking for at least some kind of value, eBay might have it. Yeah, I agree. eBay is undervalued based on PE multiples against their peers, 100%. What I want to own it? Not really. I mean, I don't shop there. I mean, I just wouldn't. Like, I don't eat at Arby's. I wouldn't want to invest in Arby's, but that's just me. I'm a little weird like that. Morning, Carlos. Do you think Apple will continue to rise in August? Apple's had an absolute tear. So let's go ahead and bring that up. And it has been improving or doing better than the broader market and broader tech. The problem is that we have this gap to fill at 157.74, my man. So again, expect that gap to be at least filled, or at least somewhat close to being filled. And then we have a gap to fill to the upside of 174.46. So my contention is that we could roll over, get to around 157.57. We'll retap that, and then we'll get back above and continue higher. If it's this year, great. If it's next year, fine. But that's where we are in terms of Apple. Again, I just trade it on options, and I just own it. I don't want to sell it. I want to keep it. Netflix, let's take a look at that. Netflix on the daily has a gap to fill right around 330. So something to look for. On the hourly, again, you could see just continuing to rise higher, kind of consolidating now after earnings. We'll go to the daily real quick. And you could see that if we did break, or if you wanted to target Netflix around 239.46, the 240 calls would be it, since that's the 100-day moving average on Netflix. That's probably your best setup, since again, you're kind of flagging here. So again, let's see if we do break 230. If we break 230, I'd probably want to go hit the 240 calls on Netflix with strong volume. What's a good PE for growth stocks? Well, remember, your PE for the S&P is right around, right now, probably 18 or 17. So again, it really depends on what you're getting. I mean, they're not all the same. If you're taking a look at, we'll bring the heat map here. If you could bring up the PE multiple let's go to the PE multiple here. Again, Amazon at a 125, Tesla at a 110. That's pretty high. And the reason it's red is because that is higher than the market multiple. Now, again, Apple should get a premium, obviously. Microsoft gets a premium. Google gets a premium. Amazon gets a huge premium. Tesla gets a huge premium because it's very growth oriented. Now, what is a good multiple for growth, a growth stock? That really depends on the investor. I mean, what you consider expensive, I might consider cheap. What I consider expensive, Mike, you might consider cheap. I mean, Verizon is cheap. AT&T is cheap, but look how much money they pay in dividends. That's a big hit on their balance sheet. But yet T-Mobile doesn't have dividends and they reinvest into their infrastructure. Their PE multiple's higher. Which one do you want to do? T-Mobile's actually been outperforming Verizon and AT&T. So again, it's not as simple as what's cheap, let's just get it. I mean, if you want to buy steak at the dollar shop, at the dollar store, you're probably not going to feel good afterwards. Probably. I wouldn't buy meat from Five Below if they even sell it. But again, there's some people who are just like, they have the stomach for it. They have the stomach for cheaper stocks and they're willing to wait, and that's fair. And there's some who want at least a little bit of some kind of better price to earnings multiple where there's some premium involved because they deserve it, like an Apple and Microsoft. Again, I think valuations still is about the eye of the beholder, the eye of the trader. What you consider a good valuation, I may consider laughable. And that's what makes a market. And that's how we do it every day. What do you normally actively trade? Options pretty much daily. Futures just depends on setups. Those are the big two. Forex here and there. I trade with my team since I give them more the setups and they'll trade it because I just don't have Forex set up on Thinkorswim and I don't know how to activate it. I haven't really put my time in. Options and futures are pretty much the only two I focus on. Options being the most. I would say 90% options, 10% futures. That's about right. And that's where we are. Guys, it was great to be back. Again, my apologies for my voice. I'm just trying to, rest it out and relax. But I've been working all week with the team every day, just getting the information out to you guys. Join me on Twitter at G.A.R Capital. Join us on Instagram at G.A.R Capital. If you're interested in, joining our Discord server, always fun to have you on board. We do our market blog every day. We talk about the markets. We have our charts on every single trade that we do. We send out a setup to premium and masterclass members. Basic does not get it. Basic just gets just the signals. They'll close when they want. But again, if you're looking for a full suite, guys, a full suite of where you feel that you're in a community of traders where we talk about this every day, the news, information, this is where you want to be. It's the G.A.R Capital Discord. Join us, garcapitalfx.com. We would love to have you on board. Have a great rest of your afternoon. I will catch you guys later for the aftermarket recap. Cheers, guys.